Hey everybody, welcome to the AI Guide on YouTube, where we're making AI human. What does that mean? It means we're focusing on the human impact of this revolutionary technology. Not how cool it is, although that's nice, but what does it do to human beings? So thanks so much for tuning in. Click the links below. 2 links. One is my book on Amazon, The Beginner's Guide to AI, History and Current Impact on 10 Different Industries. The second link is free resources to learn much more about AI than we can do in these short segments. So thanks again for tuning in, and let's get down to it today. So today we're going to talk about how AI startups get money. And we talked about this about a month ago, but a lot has changed in the last month. So startups are different than mature companies, right? Because mature companies have substantial revenue if they're still in business, and they have cash to operate on from that revenue. And that's what keeps companies that are past the startup phase going. But when you're a startup, you lose money, quite a bit of money usually, for the first several years. And that's where venture capital comes in. So venture capital is early stage equity investing. What does that mean? Let's say I was going to start an AI startup, and I might say have $50,000 to put into the business. Now this is all made up, of course. And I put that $50,000 in, and that gets the concept set and maybe help start with either the hardware that will be AI enabled, that you're going to make, or if you're doing software, then that'll help get the software started so that you have something to show to people. Once you have something to show to people, you can go to venture investors and get more money, usually millions of dollars. But to do that, you have to give up partial ownership of the company, number one. And number two, it has to be appealing to those investors, right? Because venture investing is very high risk. Like a lot of other things, venture investments don't work out 90% of the time. Venture capital firms make all their money on the 10% that hit, and hopefully hit big. Perhaps you've heard the term unicorn, which means a startup that reaches $1 billion in valuation, not revenue, but what the value of the company is stated to be based on the most recent round of investment. And this is what venture capitalists hope for. So what has changed in the last month? Well, it's gotten harder for companies to raise money. Why? Because interest rates have increased significantly, plus the inflation, which means that other possible investments now may have a greater return than putting equity funds into an early stage startup. And venture capitalists are always looking to maximize the total return of their fund. And so they will do that in multiple ways, not just investing in a startup. So in a way, a startup is competing with other investment opportunities for that money. So let's talk about what is easily getting funded still and what is getting funded but not quite as easily. So the easiest thing that's still getting funding is what's called generative AI, and we've talked about this. This is text or photo or video to an image. So this could be you type in text and the AI makes a painting, or the AI makes a photograph, or the AI makes a video from the text that's input. That's generative AI. So here's a few stories on that. Next generation AI gains steam as Jasper hits 1.5 billion valuation. So Jasper is now a unicorn. Despite the market downturn, meaning that it's harder for companies to raise money, particularly with the drop in the stock market that's been very significant, companies that use AI to generate text, images, and videos have raised substantial rounds in the last few months. Jasper, which has now raised capital at a new 1.5 billion valuation, is the latest example of investor enthusiasm for so-called generative AI. So Jasper was able to raise money at a very, very high valuation. Similarly, London's Stability AI wraps up 101 million of funding. Stability AI raised 101 million in a round led by Coatue, Lightspeed, and O'Shaughnessy Ventures. Stability AI is the creator of text-to-image generator Stable Diffusion, which we've talked about as one of the more famous of these text-to-image generators. But other things, while they can still raise money, do not raise the kind of money that these generative AI companies raise. And that may be for multiple reasons, right? Maybe the company is newer and less developed, or it's in a segment that isn't as popular right now as generative AI. So here's another one. Ambi Robotics hauls in 32 million. Ambi Robotics has raised 32 million from existing investors Tiger Global and Bow Capital, as well as RN and logistics company Pitney Bowes. We'll talk more about this in a second. Ambi offers robotic systems for e-commerce, logistics, and fulfillment. Warning, click the link below. If you work in a warehouse, click that link. Here's yet another company raising money to automate warehouses. But what I was going to say about the money that Ambi Robotics raised is, this is also typical in a little bit later stages. This is a mix of financial investors, being Tiger, Bow, and Aaron, but also strategic investors, which is Pitney Bowes. They are a strategic investor because they're a corporation in business as opposed to a pure financial investor. And then last one, Greensey raises $8 million for autonomous lawnmowers. Greensey has raised $8 million in a round led by Atlanta Ventures. The company's software enables commercial scale lawnmowers to work autonomously. So these are not the ones you use at home in your yard. These are the ones, big ones that the crews use and go around and cut commercial properties and large pieces of property with. So again, click that link below. Yard work is going to be fully automated. For cutting, we'll see about the fine yard work like trimming hedges or planting things. That's going to take much, much longer. But mowing lawns will be automated in the near future. Click that link below. So I just wanted to emphasize again that this is a challenging environment for companies to raise money in, especially given the market collapse. But at the same time, AI companies with good ideas are still getting money, which means AI is continuing along its exponential trajectory. Click those links below. Okay, well, that wraps it up for today. Click the links below, get my book on Amazon, which will give you a really good view of the impact on 10 different industries right now of AI, and also the free resource link. Everything in the resource is totally free. So grab it and learn much more about AI, because that's going to have the biggest impact of anything on your career in your working lifetime. So thanks so much. Take care. We'll see you next time.